Where's the banana zone? Well, it's like it's in the middle of the goddamn banana zone. It's been happening. Bitcoin's up 100% since we called the start of the banana zone. It then had a nice correction. It's now at all-time highs. So the banana zone is playing out perfectly. Correction phase one, the first move. We had the first move. That was the last quarter in 2024. We then have the correction phase, the correction phase, the correction phase. Then we go into the banana zone next phase, phase two, before we have the correction phase. The correction phase will be, let's go back, just pull everything together so you guys understand fully. The correction phase is this, which is when global M2 traded sideways because of the dollar correction. It's telling me that July, August might be, not July, maybe August is a sideways move.
Raoul Pal kicks off his market thesis with a contrarian perspective on panic in the markets. While many analysts and former macro professionals have turned bearish, fearing collapsing tech stocks and rising tariffs, Raoul urges investors to zoom out and focus on the key macro driver, global liquidity, especially measured by global M2. His message is clear: don't let fear headlines cloud your judgment. Excess fear gap is how he describes the market's current psychology. People are overly panicked, and liquidity, not fear, is the core variable determining market outcomes.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Who used to be with Pro Macro was like, oh my God, it's all going to shit. These companies, these tech companies, all of these people, tech companies are worthless. It's all going to go to, the tariffs and blah, 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 blah. And we came on and said, just follow global M2. What you've got is an excess fear gap. People have overly panicked. Guess what? It's caught up with global M2. Beautiful. In Bitcoin, but basically wedge pattern breakout, new all-time highs. You've seen it in the M2 chart. Great. The other one, Ethereum. This is a beautiful chart. I see the mid-curve bullshit on Twitter about Ethereum. It's all over and blah, blah, blah. It's not. You don't get it. The financial system will build on ETH. It is the Microsoft operating system of the financial world in blockchain. And they'll build layer twos. It'll work out fine. They built excess capacity, and alt season doesn't start until the ISM crosses 50. We're starting to see the base in the ETH. Bitcoin cross. I've also said Bitcoin dominance peaked. I think it continues to peak and it falls sharply, and that is what we're going to see here. And once ETH breaks 3,600, it will accelerate very fast. My ETH bet, I don't own ETH outright. I own it via NFTs, which give me leverage. I'll talk about NFTs in a bit. Okay. Solana, US dollar. Beautiful chart. Just a beautiful chart. I would expect it to form a cup and handle, accelerate higher. So, Solana's been such a great asset to own. It's kind of felt like it's underperforming a bit right now, but zoom back. What a great asset. They've done a stunning job. But Sui, on the weekly chart, massively outperforms Solana. And we're just forming this little pennant here. We're going to break higher again versus Solana. Why is that? And again, I'm not interested in your utter bullshit about, oh my God, he gets shilled. He gets paid to shill Sui. I've told you, I'm on the foundation. Yeah, I've got tokens. They're all locked up. But I switched all of my capital into it. Why? Because of this chart. It's as simple as that. This chart is outperforming. Looks like it'll outperform again. I want to own the fastest horse. I also see this stuff on Twitter. It's like, well, he flip-flops. He was in ETH before, and then he was in Solana, and then he was in Sui. No shit, Sherlock. That is my job, asset allocation. My job is to try and make myself as much money as possible before 2030 to unfuck my future. Okay, next. Sui US dollar. Beautiful, inverse head and shoulders. Went back, tested it. This thing's going to accelerate to new highs. Doge. I do care about Doge, actually, and a bag of Doge. Doge is beautiful. These wedges, inverse head and shoulders, outperforming. But what is the best thing about Doge is on the weekly charts, it's stair step, higher, higher, higher. It's going to do it again. what's going to happen is retail's going to come in, Bitcoin's at all-time highs. They're going to go to coin market cap, look down and go, oh my God, XRP and Doge are so cheap. I need to buy these instead because it's $100,000 to buy one Bitcoin. I also think the funniest chart in the entire world is Dogecoin versus Bitcoin. I may be dead wrong, but I just have a feeling the funniest outcome is that we come up, break, and before you know it, Doge has outperformed Bitcoin since inception, and that would make Doge the hardest currency in the world, and that will upset many, many people, but it will make me laugh heartily. Not that I've got anything against Bitcoin, obviously. It's just humorous, right? It's humorous and it's good for the holders of Doge. XRP, another amazing chart pattern. We highlighted this when it broke. Had a huge explosion. It's been doing this nice flag pattern, whether it pulls back and tests or just shoots from here. But XRP is going up. I mean, it's going up. I don't know how high it's going to go, but it is definitely going up. Finally, banana zone. Last 3 Bitcoin RSI oversolds. We just had that correction. Number go up, right? It's like, I don't know how many charts we need of this. This is the chart I keep reiterating. You utter morons. Not you guys personally, but that guy you've just seen on Twitter, them. They just don't understand the chart. Where's the banana zone? Well, it's like, it's in the middle of the goddamn banana zone. It's been happening. Bitcoin's up 100% since we called the start of the banana zone. It then had a nice correction. It's now at all-time highs. So the banana zone is paying out perfectly. Correction phase 1. The first move. We've had the first move. That was the last quarter in 2024. We then have the correction phase, the correction phase, the correction phase. Then we go into the banana zone next phase, phase 2, before we have the correction phase. The correction phase will be, let's go back, just pull everything together so you guys understand fully. The correction phase is this, which is when global M2 traded sideways because of the dollar correction. It's telling me that July, August might be, not July, maybe August is a sideways move, because I know a lot of you are freaked out. Is this the end of it? What do I do? Oh my God. But no, nothing. It's just a marker point. The marker point, let's go back to this chart to reiterate to you, is this bit, the correction phase 2. I will guarantee at correction phase 2, I'll be overwhelmed by people losing their shit. It's peaked. I've told you it's peaked. It's all over. It's never going up again. We didn't get the full banana zone. Oh my God, this is a stunted cycle, diminishing returns. It's terrible. Again, it'll all be wrong. Honestly, I don't see any reason why anything is going to change this cycle. I can be wrong, but I don't think I'm going to be because I put in the work.
Central banks have tools to manage yields. Expect mechanisms like SLR tweaks and even potential yield curve control. In essence, if bond yields go too high, central banks will step in and provide liquidity. Raoul emphasizes that governments have removed the left tail risk. They won't allow uncontrolled bond meltdowns because it nukes housing, Main Street, and everything else. Yields have been in a range since 2022, and while they may pop higher, the likely reaction is intervention. Liquidity wins again.
We're proving to you inflation is not the story. The tariffs were not the story. The story is and has been liquidity. And with bonds, there's a lack of liquidity in the bond market. So we have a liquidity that's driving scarce assets, stocks, Bitcoin, gold, crypto, but bonds which are not a scarce asset, because guess what? They issue a fuck ton of bonds squared, and they keep issuing more and more bonds. So what happens is bond markets start rejecting the issuance. We're in the year of the everything code, which is my big thesis, that they need to roll the debt, and therefore they need to get rates down. But as they roll the debt, rates get pushed up. Okay, great. The world's going to end according to X. It's all the worst thing. No. Firstly, the answer to higher bond yields is to inject liquidity in the bond market. By July, they will be using the SLR to allow primary dealers to hold more bonds. That is code for, hey, listen, you guys in the banks, stick bonds on your balance sheet, give some leverage out into the world, and hey, presto, new bars of bonds. Banks make money because they can lend it out. They were not allowed to do that post-2008. This is a big change. We've got the Basel IV agreement, same kind of thing, rolling out. Hey, banks, take our bonds. We'll make it sort of like it's cool to do so, and you should do it because it's good for you guys. It's the US government selling bonds. The US government, they're in the Middle East right now. Well, they were in the Middle East. They're not selling weapons. They're not selling AI. They're not selling data centers. They are selling bonds. The US is in the business of selling bonds. They have trillions and trillions and trillions, tens of trillions of dollars of these fucking things to sell. And so they have to go to the Middle East that has trillions of dollars to buy them, right? So Scott Bessent is a bond salesman. Donald Trump is a bond salesman. They're all bond salesmen. So anyway, so if bond yields get too high, Scott Bessent has already said, as the Fed have said, we will step in. We're getting to the point where Japanese bond yields are too high, US bond yields are too high, and the governments are going to have to think, what do we do about this? And they will find some mechanism to stuff it into the banking system or on the balance sheet of the central banks. Using something like yield curve control, they'll dress it up, put lipstick on a pig and call it something amazing, give it maybe a 4-letter acronym to sound even more amazing than 3-letter acronyms, and they'll sort out the bond issue. That is the benefit of being these gigantic countries and not a small emerging market. You can act like an emerging market and pretend you're not. And you can force your huge savings pools into these vehicles. So bonds, I don't think, are a problem because the reaction function from central banks is always, and in every case, to print more money. They've removed the left tail risk from markets. So I think they will solve it. Also, really, bond yields, 10-year yields, have been a pretty sideways range. In fact, let me show you a chart of that. I've got plenty more charts to show you. At the same point, so many times over the last few years. So there's actually nothing really going on. Bonds, everyone freaks out about when they get to the top of the range, and then they don't. Now, maybe these break higher. If they break higher, answer is print money, stop that happening immediately. Because if not, you nuke the housing market, you nuke Main Street, and all of the things that you don't want to happen. So generally speaking, beg the Saudis, beg the Abu Dhabi, beg Qatar, buy our bonds, get the Chinese to do the same by agreeing a deal, get the Japanese to do the same, make sure the Europeans buy our bonds, and if not, stick in our own balance sheet because that's what we get to do because we're the US. So if I share you the chart, sorry, I didn't share it earlier, there's the chart bonds, bond yields for the since 2022, they've basically gone nowhere. Then everyone freaks out at the top, so the world's going to end, freaks out at the bottom, rates going to zero. I still think they come lower, but maybe I'm wrong. Doesn't really matter. I'll show you some charts about what happened in 2017. Last time we went through the same machinations of we're all going to die, Trump's going to ruin the world, and nothing actually happened apart from the markets, crypto, tech, equities, everything just went to the moon. So bond markets is something I would suggest you should not be worrying about.
Raoul draws a parallel to 2017, a year filled with fear-mongering and doom predictions under Trump's administration. What actually happened? Crypto, tech stocks, and risk assets went parabolic. He believes we're setting up for a repeat performance. He wraps this section with a powerful reminder: liquidity is the story. It always has been. Please like and subscribe.